So tell me a little bit about this warning now that you think, or you're saying, we're going to face the biggest
your home loans. We're bankrupt.
To understand Kiyosaki's warning, we first need to go back to 2008. That was the year the world saw one of the most devastating financial crises in history. The collapse of Lehman Brothers, the credit crunch, the crash of the real estate market, and the ensuing recession devastated families, businesses, and entire nations. For many, it felt like the end of the financial world. But for Kiyosaki, 2008 was just the beginning of a much larger and more dangerous story.
We're at the end of an empire right now. It is the end. It's the end of this. And all empires always come to an end. The Roman Empire, the Greek Empire, Chinese were the earliest. Chinese were the first guys to use paper.
Right.
So what we're looking at today is the end of the American Empire. So it's a very dangerous time. It's explosive, with Palestine Gaza, all the stuff that's going on is an end of times. Not biblical, but just an end of an era. And the trouble when this comes to an end, war follows. That's what I'm afraid of.
He points to what he calls the criminals at the Fed as key figures in the financial mismanagement that led to the 2008 crisis. According to Kiyosaki, the Federal Reserve responded to that crisis not by addressing the root causes, but by printing trillions of dollars in what he calls fake money.
Even the Federal Reserve Bank, right? It's not U.S., it's not federal, it's not a bank, it has no reserves. It is a banking cartel. The richest bankers in the world control the Fed, the Bank of Japan, the European Central Bank, Bank of England, Bank of Australia. Those guys, when you mess with them, that's what I'm saying. You're not messing with your next door banker. You're messing with the Rothschilds and those guys. So that's why I go, okay, I'll just keep my head low and buy and see what happens.
For Kiyosaki, the notion of fake money refers to a fiat currency
And that's why I'm a rich man. They can take everything away from me. Plata e oro, silver and gold, will be here 1,000 years from now, 10,000 years from now, 100,000 years from now.
Fast forward to today, and Kiyosaki claims we're seeing the consequences of years of financial decisions driven by cheap credit, endless debt, and artificially low interest rates. What we now have, he says, is an everything bubble, a situation where not just one market is overvalued, but virtually all of them are. Stocks, real estate, bonds, and even art and collectibles are priced far above their real value, inflated by the flood of cash that has been injected into the economy over the past decade.
So real estate requires very special, much higher levels of financial education, sophistication, and experience. And what really happened, as you know, is that the Federal Reserve Bank and the Treasury, they just started printing more money than ever before in the history. So this is called the everything bubble. And from some of the more people I respect, they say this is the biggest bubble in world history. And it is in dollar amounts. And if history repeats itself, this is going to be the biggest crash in history. Now, for many people, it's going to be the worst thing ever happens to them. But for Kenny and me, it's the best time to buy more real estate after the crash. Savers are losers.
So what is the everything crash? For Kiyosaki, it's the implosion of this overinflated market, where prices across multiple sectors will come crashing down all at once. He envisions a scenario where stocks could lose 50% or more of their value, real estate prices plummet as demand dries up, and bonds, which are supposed to be safe investments, turn into liabilities due to rising interest rates.
Can the Fed print oil? Can the Fed print gasoline? Can it print food? But everybody sits there and they've been brainwashed by Wall Street to go, do as the Fed tells you to do. Well, you gotta be kidding me. Those guys are the three stooges, Janet Yellen, Biden, and Powell. You gotta be kidding me. Why would you listen to them?
Kiyosaki is particularly vocal about the dangers of bonds. Traditionally, bonds have been viewed as safe, low-risk investments. But Kiyosaki believes that bonds are now one of the riskiest investments out there, especially government bonds. He argues that the massive national debt accumulated by countries like the United States is unsustainable. And as interest rates rise, the cost of servicing that debt will become unmanageable. When that happens, he warns, We could see a default on bonds or at least a severe devaluation, meaning investors who thought they were safe could end up losing a large part of their savings.
So we're going to hit a new high in inflation. That means a new high in interest rates. A total disaster for bond prices. Bond prices are going to go down 70%.
I'm getting a little confused here. So are you saying that we're in 2022 right now? Are you calling for inflation to go higher?
Yes.
And then how does that destroy bonds?
Because when interest rates rise, the bond prices decline proportionally.
Right. So, a bond is this. Let's say if a bond that's paying 10% is worth so much money. But if the interest rates, if inflation goes to 20%, the value of the bond drops.
One of Kiyosaki's gravest concerns
Leverage to get rich.
To put this into perspective, let's consider the price of everyday items. In recent interviews, Kiyosaki has used simple examples, like a $14 egg salad sandwich, to illustrate the creeping danger of inflation. What might seem like a small annoyance now, he says, could quickly escalate. If prices continue to rise at the current rate, the cost of basic goods could become prohibitive for ordinary families, forcing them to choose between essentials.
So they know, the inflation, not one man in a million understands inflation. That's the other thing that they knew.
No.
So, and inflation causes nominal confusion. So you had a $20 bill 10 years ago, you got a $20 bill today. It's still a $20 bill. Nominally, they're identical. But what that would buy you 20 years ago, what it buys you today, vastly different.
When it comes to preparing for the everything crash, Kiyosaki has three primary recommendations: gold, silver, and Bitcoin. He believes these assets are less vulnerable to the collapse he predicts because they are not tied to the traditional financial system in the same way as stocks or bonds.
I don't save dollars. That's why I put savers or losers. And I save silver and I gold. And just recently, about 10 years ago, I started buying Bitcoin, and I look at the whole thing and then people want to argue. I hear it all the time on YouTube. Which is better, gold or Bitcoin, or silver or Bitcoin? And I was laughing. Why do people argue about such stupid things? Just how many do you have? That's all that counts. How many ounces of gold, how many ounces of silver, how many Bitcoin or Solana or whatever you got. But they want to argue and debate it, and they don't have anything. That makes no sense to me.
Gold and silver, according to Kiyosaki, are timeless stores of value. Unlike fiat money, which can be printed endlessly, person can ride out the coming crash by following traditional investment advice. Instead, he encourages people to take proactive steps to protect themselves. One of his key pieces of advice is to build financial education. He believes that understanding money, investments, and economic cycles is essential in a time when the rules are changing rapidly. He suggests that people read, learn, and develop a strong grasp of what's happening in the world of finance. He also fear to their audience. Kiyosaki himself has admitted to being an entrepreneur at heart, not a stock or bond market player. For those following his advice, this admission serves as a reminder that not every self-proclaimed financial guru has practical experience in the areas they promote.
It is a number one skill of an entrepreneur. If you can't sell, you suck.
Kiyosaki's influence stems largely from his ability to craft a compelling financial narrative, even if his numbers don't always add up. His messages are often simple yet striking, and his knack for storytelling often eclipses the substance behind his claims. Whether it's the idea of escaping the rat race or warnings about a looming everything crash, he taps into financial anxieties many people feel, especially during times of market volatility. This tactic is not exclusive to Kiyosaki. Financial media is full of similar voices warning of economic calamity or touting can't-miss investments. These narratives play to emotions rather than facts, encouraging reactive decisions that might not align with sound financial principles. For investors, understanding the difference between storytelling and reliable financial guidance is crucial.
Robert Kiyosaki's main strategy for getting rich is to write books and sell them to people, telling them it's going to tell them how to get rich. So if you can emulate that, that is a way. Now, listen, I read Robert Kiyosaki's Rich Dad, Poor Dad, like the first couple of books when I was probably 16 or 17 years old. And I don't find them substantive and I don't find them serious.
Another recurring theme in Kiyosaki's rhetoric is market timing. He warns followers to wait until prices have bottomed before buying, but history shows how difficult, if not impossible, it is to time the market accurately. Even seasoned analysts and hedge fund managers struggle with pinpointing market bottoms and tops. For the average investor, a investments.